So I want to go through the trade I took on Friday, October 10th. I took SPY calls. You can see that the entire day did go bearish, but I did end up entering calls in the morning right at open. And a lot of my trades are like right at open. I look for a really strong trend and then I enter in that, and it's mostly like a really short scalp. And this entry, I'll show you, it's really short. I made about like 1,500 in 5 minutes or so. A lot of my trades are really short and I do leverage really high in them. So I leverage high, the move is small, and then I profit pretty big. The overall time frame. So how I do my trades is that every day before the market opens, I determine which ticker I want to trade. And typically it's going to be one of these. These are just the rotation of the different tickers I look at. But every day I do look at different ones depending on what I see overall. I'm looking at the overall picture first because all those little moves I take on a tiny little time frame, those are just fractions of a move of the bigger time frame. So if I understand like the bigger strength, the bigger direction overall, then my trades are going to be much higher probability because I'm basically trading in the correct direction overall. So here you can see that price tanked. It did tank from a huge news and everything, but the opening movement here, so price opened up around this area here, and when price is kind of inside a weird choppy area at all-time highs, I'm basically relying on key levels nearby to tell me which direction I should trade in. So then all I really focus on when price is this weird is that I just look at the key levels nearby, and the key levels will always be just prior day levels. So I keep it really, really simple as I can. So here we have the Friday movement. My scalp was just in this push here. And the only levels I really had here were just the pre-market high right there. That's always a key level I have, which is just the session, aftermarket, pre-market, whatever highest level there is. And then other than that, it was just the previous day high, which was right there. So keeping it super, super simple when I trade. And you can see all these levels, price always tends to reject it. You can see here, price rejected at the high of Thursday. So you just see a repeatable pattern. So what you want to do is just react based off what price shows us. So at open, I didn't really have a certain bias. Depending on the ticker, depending on the day, I will have certain biases, whether I look for calls, puts, away from certain levels, or I may stay out of certain areas just because those areas are weaker. So it just depends on the day, depending how I trade it, and especially the strategy I use. I just trade pullbacks, but essentially the pullbacks, you have to really know when to take it. Anyways, looking closer, we have, a zoomed in version. So here, I was looking at the opening movement here. I did enter in on this call position. Looking at this overall movement, what I'm looking for is before I enter, I just want to see that, hey, price is breaking out of a level. Price is going bullish, or is it bearish? And then does it break these levels? These are all levels where I mentioned earlier that price has a tendency to bounce from it. So if you are taking any entries, I like to wait for that level to break first, and then I look for an entry. Any kind of entry, if I'm doing calls under here, there's always that potential where price could fake out. So I want to avoid that. I want to wait for price to clear and then I enter. The cost of my entering this position was $5,770. This was about, I believe, 30 contracts. But then the profit was like 1,500. And then going over the execution, the execution is always the same. This is how I trade every single day when I trade. So it's the same type of strategy, same type of entry criteria. And then from there, I just manage to trade however it moves. So here, price ended up breaking this resistance level, which is what I want. It shows a really strong push, a close. You don't want to see a huge long wick. You don't want it to wick and then close lower. So what I like to do is always wait for a push above a level and then a close. I want to see that price is actually strong. And then what I saw here is that price came down to retest the level. You will always get some kind of retest, pullbacks around certain levels. So that's essentially what I'm looking for. I'm looking for price to come back to that level. And then once price pushes higher, then I enter. You could always enter on the retest area. Of course, that, your stop loss would be so tight, and then, you have so much room for it to run. But I like to wait for a much higher probability setup, just because a lot of entries, if I do take it too early, sometimes it ends up being a fake out and then price just drops and then I get swapped out so quickly. So upon this movement, price retested here, and then my entry was right here as it broke higher above these two candlesticks. So I just, a lot of the ways I trade, I like to wait for price to break certain levels that are shown. So this is a key level where it's a new high of day. It's, it shows 2 wicks around the same level. So it's showing a high of day. And if you wait for price to break that area with strength, that just shows really strong bullish strength. So my entry was there. My stop loss was down here because it's, again, a retest level. If price breaks the retest level, it's essentially showing a fake out, breakout of this level, and then you want to be stopped out. So that was my original stop loss. And throughout every trade, I do move my stop losses depending on what makes the most sense. Like what area has the best, the key level. What's the key level nearby? And then I'm just going to use that as an area to watch. So price ends up pushing really strong, really strong push. And this is just a 2-minute time frame. So as price is pushing, I'm seeing, hey, price is pushing. It's really strong. It's holding, and it's not just going up and down, really indecisive. It's pushing upward and then holding that area. My next stop loss was basically the midpoint of this candle. So typically, if you see such a strong push like this is not a normal movement. A lot of other candles are usually smaller. So when I see a strong push like this, I just move my stop loss to like the midpoint, because I know for a fact, if price comes down, it should never break the midpoint. If it does, it's showing a huge push in bearish strength, and then it's no longer showing me a lot of bullish, movement. So then price has a higher chance that it could reverse. So as this candlestick is pushing, you have all these indecisive candlesticks, the dojis, showing a lot of indecisiveness. Basically during the 2-minute time frame, it's going up and down, and it's essentially showing you that there's a lot of indecision. It's really bullish, it's really bearish, and that's why it's so big of a movement, because it goes all the way up, all the way down, only to close in the center here. So with that indecision, it doesn't really tell me any reason to exit. I'm not going to exit just because it's indecisive. I usually like to exit based on, strength, or just based on the prior movement telling me that, hey, price is slowing down. It may likely reverse at some point. So here, price is really indecisive. As I saw this key level created, again, every wick you see from a candle, if it comes multiple times on multiple candlesticks, just like this area, 2 wicks, same area, 2 wicks here, same area, that is my new stop loss. So it's all like looking at it as what's the most logical reasoning behind a certain move. And basically all my trades are based on logic. There has to be a reason why I enter. There has to be a reason why I exit, all that stuff. So just essentially, if you understand these candlestick movements, whether they are strong, whether they are weak, that's really all you need to look at. So here, the next candlestick ends up pushing higher. What I liked about this candle is that it did not push any lower here. You can't see this whole area here, a lot of wicks here, but a good telltale sign of price going continuously bullish is that it doesn't come all the way down here to this area. What happens is if it opens up, which it did open up here, it doesn't go too far down. So you want to see that price rises. And on this candlestick, it ended up pushing really strong, breaking this new high of day. So whatever position you're in, if price continues breaking the next candlestick, it breaks the high of day continuously again and again, then it's essentially showing you that there's still strength in that move. You want to hold that position. So price ends up pushing higher. It ends up closing really strong. So we have tiny wick above, a tiny wick below, a huge body, essentially showing us, hey, it's strength. There's a lot of strength. There's bullishness. So other than that, price ends up coming to this new key level. So like we drew all the way here, this is a really important level to watch for. This is essentially the all-time high area, and it is that key level we drew from the previous high of day. Like I mentioned, all these levels you draw are really important, because if you see that price comes to that area, you start to have a lot of weakness, or price shows that, hey, it's pushing away, it's rejecting. That could be the end of the move, and then you want to exit, because after that, if you're holding the trade, price could come down, and then you think it's going to go higher, but it doesn't, and it just reverses. So you have to really determine, hey, do I want to exit this trade? What is the potential for price really to push, or is it just going to fall? Now, on this candlestick, price looked really indecisive, and because I know how price moves based on how I trade, based on experience, the same moves I trade every single day, this is the thing where I exited on this candlestick closer to the lower part, just because I wasn't too sure if price was really going to push higher, but it looked really weak at the time. This was my exit. My full position exit was right here, because I saw price rejecting at this high And another thing is that when you see price really strong on the other candlesticks, this is kind of slowing down at this point. Price is showing me that it's getting a little weaker. And I know for a fact that every morning trend does not last that long. When I go into a certain trade at open, I know for a fact it will likely, it could reverse, it could pull back very deep. I am not willing to be in a trade if price pulls back really deep, because based on the time decay, based on holding the contract, I'm not willing to be in a trade that long. So I'm just trying to look for what is the strongest push in the market, and then once it starts getting weaker or shows signs that, hey, the trend is ending, I'm going to be out. So on this push, pushes down, I was waiting a while. I kind of exited towards the end of this move, or the close of the candle, just because I was really trying to see, hey, is price really strong, or is it going to push higher, or is it just really weak now and it's going to go lower? So as it started to push lower here, I did exit my full position, and then that was the trade. All my trades are full position in, full position out. I don't take partial profits just because all my trades are just really short moves. So the reaction time has to be really fast, and I'm not willing to exit partially here and there. It's just such a short move, so I don't see a point. I see it that if I'm entering anything, it's going to be full in, full out, and then other than that, I have to accept the fact that maybe price goes higher later on, or sometimes, well, most of the time, based on how I exit at the best position I can on the trade, and then price ends up dropping, it starts going choppy. So I do watch for that to see how can I improve my exit strategy. But most of the time, I would say, because I trade a certain way, I do get the maximum height of that trade, because essentially once it gets weaker, that's it, that's the trend. These type of setups are going to look different every time. The market moves so differently every single day. Every ticker moves really differently, and sometimes you won't always catch these certain moves, and these will look really different. Sometimes the candlesticks look really different, or this setup happens at a different time, or it goes in a different direction, or you have to wait for another level to break out of. So I'm looking at all these different confluences as I'm entering any kind of position, and all these trades, I always just document them. I take screenshots, and then basically I've compared so many different types of entries, so I know exactly when should I take this trade, or when should I stay out of certain moves, just to make sure that I'm taking the best trades I can for the highest probability success rate. So if you like this type of video, I do this in my Discord every week. I show all my executions, all my trades, wins and losses, so you can learn from both of them. And then essentially I'll tell you what I'm trading every day and which direction I'm looking for. As a whole, this is essentially what I do every day. I'm just looking at how does price break certain levels, calls, puts, and then other than that, all these other moves, I don't care to be in, because if it's later in the day, if I've already traded, I had that one win, I'm good. I don't need to overtrade. I don't need to hop in other trades.